He actually invested in the piece.
We're mixing into private equity for real.
It's going to be a hard sell to our investors. The street's going to start wondering if you care more about revenge than making money.
And so do I.
Lead. How does venture capital and private equity work, and why do hedge funds invest in these asset classes? We will discuss this and much more as we analyze Billion Season 4, Episode 2, based on my work experience at the top hedge funds in the world, my work experience starting a hedge fund and a venture capital firm where I invested in Palantir and Facebook pre-IPO, and my work experience at Goldman Sachs. Now, please like, comment, and subscribe, and stick around, because at the end of this video, we'll grade the episode for Wall Street Realism with a buy, hold, or sell rating.
Not exactly RoboCop. We're looking for no more than 5 firms to fulfill 100 mil in the C round, which comes with anti-dilution rights.
So within 10 years, many of us will own Tesla robots. Now, Bobby Axelrod and his sidekick Wags are considering investing in a robot company, and you'll notice the executive mentioned a $100 million C round. Now, the first round a VC firm does is the A round, then the B round, then the C round, and sometimes a D or E round before the IPO. And the second that revenue growth starts to decelerate, the venture capital investors call their investment banking buddies and ask them to do an IPO. Now, anti-dilution rights protects investors if the company later raises money at a lower valuation, meaning a down round. Now, is this a good investment?
The margins on this thing are already thin as Kate Moss on a juice fast.
The money taken in today will go a long way in offsetting any costs.
So you'll notice a lack of hardware companies going public compared to software or AI companies. Now, unless you're Elon Musk, many investors don't want to invest in CapEx-intensive industries with low-margin products where inventory can destroy a company.
If it makes your life easier, I'll take a piece.
You will, that's great.
But there's something that matters to me that I need in return.
So we'll come back to venture capital and private equity in this video soon. Axe is investing to please this banker representing the robot company so he can screw over Taylor, who quit Axe Capital to start a rival fund.
Patriot Trust Bank can't extend you leverage at this juncture.
So Taylor wants a bank to provide leverage, meaning borrowing money to invest. And a lot of hedge funds do this to juice returns. In fact, in the fall of 2008, when we were within 24 hours of bank machines not working, large market neutral hedge funds used 10x leverage, meaning for every $1 of assets under management, they invested $10, which bankrupted many of them. And please don't use leverage with stocks, as Warren Buffett calls derivatives, financial weapons of mass destruction. Now, Axe did not just give money to Patriot Bank and ask them not to give leverage to Taylor, but Axe also did this with other lenders.
This is going to be a time of great prosperity for us both. So I'm glad to continue, to renew, to start our friendship. I know your bank would have liked the other business, but I'm touched that you prefer mine.
So Taylor can't get access to leverage because Axe is dealing with all these banks. So if he can't get access to leverage, meaning loans from banks, then Taylor's firm cannot put up stellar returns.
Axe got to all of the bankers. I'm done. It's not time that's the problem, it's capital. Winston and the Quant team have a huge stat arb opportunity that I'm gonna have to leave on the table if we don't lock in leverage by end of week. I can't let Axe cause that.
So when the Quant team mentions a stat arb, meaning statistical arbitration opportunity, what they're talking about is a trade where a computer model detects that 2 or more related securities have temporarily moved out of their normal relationship and are likely to converge again. And quant hedge funds like Renaissance and D.E. Shaw do this a lot. Now here's a very simple example. Historically, Coca-Cola and Pepsi tend to move together. Suddenly, Coca-Cola jumps 8% while Pepsi is flat or falls. The quant model concludes that gap is unusually large. So what it does is it shorts Coke and then buys Pepsi. And if the relationship returns to normal, then the trade profits regardless of whether the overall market rises or falls. And this is a market neutral strategy, meaning equal dollars of longs and equal dollars of shorts. Now, if a hedge fund runs market neutral, then it can often lever up big time, meaning borrow money to invest. Let's get back to Axe investing in the robot company.
He actually invested in the piece of shit.
Believe me, I was excited that we were getting into private equitatis, but badly built robots?
Private equity, Spiros.
So that's not accurate. The robot investment is a venture capital investment and not a private equity investment. Now, we know this as Axe invested in the C round. And this company is likely not making money, which is typical for early stage VC investments. So very quickly, what is the difference between private equity and venture capital, and what are both classes? So private equity and VC firms charge 2 and 20. just like hedge funds do, meaning a 2% annual management fee and a 20% fee of the profits. An example is in this graphic right here. And venture capital firms invest in early stage, often unprofitable companies with the intent of the company going public in many cases one day. Now, in private equity, firms often buy controlling stakes in more mature private and public companies. Some of them are cash flow positive. Then they use leverage, improve operations, and then they sell a few years later to make a profit. And their intent is that they can quickly turn the company around, make it better, and then sell it back to the markets. Now, here are some examples of successful private equity deals and which private equity firm was involved. If you want to get a job in private equity, you usually have to work first in investment banking for about 2 years. Now, why does X really want to get involved in venture capital and private equity?
But if we go in on crappy companies just to get the return favor over Taylor Mason, it's going to be a hard sell to our investors of the wisdom of the idea. At a certain point, the street's going to start wondering if you care more about revenge than making money.
And so do I.
Leave.
So Spiros here from compliance gets no respect, which is accurate at some hedge funds. Now, Bobby Axelrod wants to screw over Taylor Mason Capital, but you can never be emotional in business. And as Warren Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Now, I've worked with many successful billionaires in hedge funds, and many of them are highly unemotional. You want to be a contrarian so you can watch your net worth take off.
We're mixing into private equity for real. And I got everybody downstairs generating ideas.
You haven't said yes to any of them yet.
They have a dozen internal ideas you've turned down.
Because they all suck.
Axe is right to be patient because 99% of the venture capital deals that the top 10 venture capitals on the planet make are not unicorns, meaning not billion-dollar companies. And almost all private deals go to zero. That's right. So the next time your friend asks you to invest in their startup, I want you to think twice, and I want you to tell yourself this in your head. Why am I so lucky to be given this opportunity? Well, the reason is because it's either not a good idea or because nobody else will invest.
What we need is a meaningful partnership, and I know how to find it. Helena, could you have the team put together a list of all the private companies Rebecca Cantu is invested in?
Now, Axe is going to piggyback on rockstar private investor Rebecca Cantu, whose success rate is amazing, just like Peter Thiel, who invested in Facebook and Palantir in his VC fund. I also partnered with Peter Thiel and invested in those two companies in my VC fund. And later on in this video, at this timestamp right here, I'm going to show you why Peter Thiel invested in Facebook, and I'll do a review in this video of the movie The Social Network to explain how a VC deal works. And this will be fun to watch before you watch the sequel to the Social Network movie. Now, will Rebecca let Axe Capital invest?
What if I want to partner with you?
I'm not raising.
You're really not taking on any money?
Opening a new fund in a couple of months, we can talk then.
Now, when you invest $10 million, say, in a hedge fund, you wire them all the money and they usually immediately invest it, but not in private equity or in venture capital companies. What you do is you commit to invest. Then, when the VC or PE firm finds an investment, you get a capital call from them asking you to wire the money. So if they put 10% of the fund in one investment, then you get a capital call asking you to wire 10% of your $10 million investment, meaning $1 million. So how is Axe going to impress Rebecca? Well, she let him invest in a cleaning company, and he will impress her by destroying a company that competes with the cleaning company that she invested in.
Tuck, you're about to go get a job.
This is how it works the day after payday.
Giving back money doesn't seem fair.
If you want to stay, that's the way.
Axe sent Tuck, one of his analysts, as a spy and destroyed the company, which then got really bad press. Now, this doesn't happen with hedge funds in real life, although during the fall of 2008, there were rumors that hedge funds shorted mid-cap banks and then hired actors to line up outside of the banks in New York City to get their money out. Let's see if this move impressed Rebecca.
You know what kind of horrible your competition was up to?
Of course I did. And I would have beaten them in time through proper business practices.
And now you have.
And my piece would have been worth even more if I didn't cut you in. Give me back the shares, go.
So Warren Buffett said it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. And Rebecca knows that Axe is unethical and wants nothing to do with him. Now, why have hedge funds invested a lot in venture capital deals in the past 15 years? Well, it's because companies that were VC-backed used to go public in the past. When when the market cap was about $1 billion. Then venture capital firms realized, hey, let's raise much more money and take them public at massive valuations much later. Therefore, hedge funds were missing out on massive opportunities to make money in private deals. Now, what some, very few, unethical hedge funds do is when they have a bad month with their stock portfolio, they might mark up one of their VC investments. Now, let's talk about Silicon Valley and the venture capital sector from scratch, including Elon Musk's role in what is called the PayPal Mafia. So, Americans were brokenhearted in October of 1957 when Russia beat the United States into space by sending Sputnik into space. So, in 1958, President Eisenhower founded NASA, and in order to boost the depressed American public, Kennedy said this.
We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard.
In order to put a man on the moon, NASA needed high-powered components to be developed for the rocket. And fulfilling that need was venture capital-backed Fairchild Semiconductor, which was founded in the Bay Area where I live in the midst of the Cold War competition. Now, the guys that founded Fairchild Semiconductor were called the Traitorous 8 because these 8 engineers left Shockley Semiconductor Laboratory in 1957 to found Fairchild Semiconductor, and William Shockley, who was not a nice guy to work for, called them traitors. And the co-founders of Intel, meaning Bob Noyce and Gordon Moore, were two of these traitors, and Eugene Kleiner from VC powerhouse Kleiner Perkins is also one of the traitors here. Now, without the Traitorous 8, this would not have happened.
No way. That's great. We landed on the moon!
He improvised that for the movie Dumb and Dumber. I know every line from that movie. Okay. As with all big tech companies, they get too big and bureaucratic and they can't innovate. So these dudes quit to start fair children companies here in the San Francisco Bay Area like AMD and Intel, which was VC backed, and employees of Intel founded VC backed companies in the Bay Area like NVIDIA, Broadcom, and Marvell, which were all backed by the best VC firms in the world, including Sequoia. Then many hardware, networking, internet, and other tech companies like Apple, Cisco, Google, Airbnb, and PayPal were founded in the San Francisco Bay Area and all backed by VC giant Sequoia. And government research led to the creation of the internet in case the East Coast couldn't communicate with the West Coast if, God forbid, a nuclear bomb landed in the middle of the United States. And software giant Oracle was also backed sort of by the CIA, as the CIA's first notable database was called Oracle. And GPS exists on our phones because of guided missile research. Now, what is it about the San Francisco Bay Area? Was all this created here in the Bay Area only because of Sputnik and then the creation of NASA? No. What happened at the same time in the Bay Area in the 60s was there was a hippie movement, make love, not war. And students at universities out here like Berkeley and Stanford protested because all they knew in their lives was war. Their grandfathers died in World War I, and their fathers fought in World War II, and their brothers and friends were fighting and dying in Vietnam. And so students in the 1960s took over Stanford University because at that time, 50% of Stanford's R&D budget was classified government military weapons research. So Stanford said sorry and pushed SRI, meaning Stanford Research Institute, off campus, and a more open environment was born, meaning open source software, and the culture of sharing everything. So the startup and venture capital culture in the San Francisco Bay Area is different from Access business of hedge fund investing.
Venture philanthropy can work, but it requires a rigorous level of oversight. This group isn't built for that.
So, as you can see, the venture folks don't see eye to eye with Axe from season 3, episode 4.
Spoken like the overpaid day trader you are.
So says the Northern California pipe dreamer.
So hedge funds are short-term focused, of course, whereas venture capital firms think about 5 or 10-year longer investment horizons. Now, with stocks, people tend to focus too much time on the financial statements and not enough time on the management team. With stocks, we've all heard the legal disclosure that past performance is not indicative of future performance, but this is controversial, what I'm going to say. But I think that with venture investments in startups, past performance is somewhat indicative of future performance, because if you invest in a founder like Elon Musk, who's been successful in the past, then the probability that they will be successful in the future with new startups is much higher. Now, the most important thing with a startup is the quality of the management team.
What is the most popular thing in the world?
Music.
No.
Tell me.
Ice cream.
Okay.
Everyone has.
So venture capitalists and high net worth investors always prefer to invest in an A management team with a B business model instead of investing in a B management team with an A business model.
Okay.
Is you win or is you win?
Okay, well, it sounds like a good idea, and I hope you make a lot of money. Good luck, folks. It's been nice seeing you. You take care of yourself, okay?
Is you going to be in on that?
Well, it sounds like an interesting...
We've got like P. Diddy is going to be...
That did not age well. So when I worked in venture capital, I was on a board where Sequoia led the A round, and we led the B round, and I sat down with Doug Leone from Sequoia, who's a rock star, and I asked him in our 90-minute one-on-one meeting what kind of people he invests in, because the top 10 venture capital firms on the planet have just 1% of their investments in unicorns, but Sequoia has 5% of their investments in unicorns. And Doug told me that the type of founders he likes to invest in are the ones, and I'm going to butcher this, but the best founders to invest in had something happen to them earlier in their lives that leads them to believe that they're not good enough, and they have a chip on their shoulder, and they want to prove the world wrong and put a dent in the universe. Ouch. Now, these are always the best people to invest in because they won't sell their company for 10 million or 100 million or 100 billion dollars. For example, Elon Musk. He had the crap kicked out of him as a kid because he was different. So he wants to prove the world wrong, and money is not his sole motivator. And for me, and I'm nobody, but when I was a kid, teachers wanted to fail me in the 6th grade and the 8th grades, and they sent me to a learning disability center for tests. So I want to prove teachers wrong, and I will never sell my company for any amount. Also, those who can't do, teach, and those who can't teach gym class. And I suck at sports, you're all out of luck. And I'm just kidding. I love all teachers, most of them at least. Now, in a minute, I'm gonna talk more about Elon Musk and the PayPal Mafia, and this will help us thoroughly understand the importance of investing in a great management team with both private and public companies. Now, if you want to learn more about venture capital, I recommend this book right here called The Venture Mindset by the #1 VC professor on the planet, Stanford professor Ilya Strebulaev. I interviewed him recently on my weekly YouTube webcast, and a link to the interview is in the description of this video. Now, in a second, we'll discuss venture capital by reacting to the Social Network movie at this time code. But first, very quickly, let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. Now, the episode did a superb job of showing how hedge funds are more interested these days in investing in private companies in order to juice their returns. The episode also did a good job of explaining how some funds that run more market neutral cannot do well without leverage, meaning loans from banks or the prime brokerage firms that they deal with. However, I think the episode misclassified the robot investment as a private equity deal when in reality it's a VC deal. As a result, I'm going to give this episode a hold rating. Let's now check out my review of the movie The Social Network so we can learn more about how venture capital deals work.
Peter Thiel just made an angel investment of $500,000. $500,000.
Mark!
He's wired in.
Better lawyer, Bob. Because I'm not coming back for 30%. I'm coming back for everything.
Today I'm reacting to the Social Network movie, but through a finance and founders lens, meaning startups, venture capital, ownership, and dilution. Now, the movie is one of the best pulp culture case studies for explaining how venture capital-backed companies and startups actually work, especially the moment you take outside money and when the cap table, meaning ownership, turns into a battlefield. Here are the key players in this movie, and we will also discuss many startup and venture capital concepts in this reaction video. Stick around until the end of this video because I'm going to grade the movie for startup realism with a buy, hold, or sell rating based on my work experience in venture capital, where I invested in Facebook and Palantir pre-IPO along with Peter Thiel, and based on my experience being on the boards of companies along with venture capital firms like Sequoia and Andreessen Horowitz.
We're going to need a little startup cash to rent the servers and get it online.
Did he offer terms?
Yes. We'll split it 70-30. 70 for me, 30 for you for putting up the $1,000 and for handling everything on the business end. You're CFO.
And you said?
I said, let's do it.
Now, this is seed stage, meaning the initial investment entrepreneurship phase in one sentence. You need upfront cash just to get the product online. And notice the psychology here. Founders like Eduardo here, I own 30% and they think it's permanent, but it's not. In venture-backed reality, it's commonly a starting point, not an ending point.
Can I help you? I'd like to freeze this bank account and cancel all existing checks and lines of credit.
Accurate. In real life, Eduardo did freeze Facebook's bank account, and Zuck's family had to put in about $80,000 in order to help Mark continue to run the company. And Eduardo should have been fired immediately for that, but of course Zuck needed the money. and Facebook could have gone bankrupt. And startups die from running out of cash far more often than they die from bad ideas. And Facebook needed more money and better governance. And this next clip is Mark Zuckerberg's first meeting with legendary venture capitalist Peter Thiel, who gave them much more than money.
Hey guys, come on back. We took a look at everything and congratulations. We're gonna start you off with a $500,000 investment.
And this is the angel investment where Facebook was valued in this round at around $5 million, meaning Peter Thiel owns 10% of the company. Now, getting Peter Thiel as an investor is a huge deal for Zuckerberg because Peter Thiel was part of the PayPal Mafia. And per this graphic, the PayPal Mafia includes the following early employees that worked at PayPal that dominate Silicon Valley, including Elon Musk, the founders of YouTube, LinkedIn, Yelp, etc. And please remember that the jockey's always more important than the horse, meaning ideas are commodities, but execution is not. Now, the Winklevoss twins had an idea for a business like Facebook, but they couldn't execute, partially because they were focused on other things. And when you start a company, you need to be all in.
You have part of my attention. You have the minimum amount. The rest of my attention is back at the offices of Facebook, where my colleagues and I are doing things that no one in this room, including and especially your clients, are intellectually or creatively capable of doing.
Now, if you want to be a billionaire, you need to be all in like Zuck was with Facebook. And Mark was so committed that he dropped out of Harvard, whereas the Winklevoss twins were focused on rowing in this lawsuit. Now, just because you have an idea for a company does not mean that you can execute on it.
Do you see any of your code on Facebook?
Sorry, could
Mark, did I use any of your code?
You stole our whole idea.
Fellas.
You know, you really don't need a forensics team to get to the bottom of this. If you guys were the inventors of Facebook, you'd have invented Facebook.
This is one of the most brutal sentences in startup history, and it's a useful business lesson. In venture investing, people say, bet on the jockey, not on the horse. And there's a reason Peter Thiel's current venture capital firm is called Founders Fund. It's because you bet on founders and not just ideas. And the top VC firms would always rather invest in an A management team with a B business model rather than a B management team with an A business model. Now, this movie is based on this book I read, and it's not accurate at all because it reads like the author mainly spoke to number 1, Eduardo, and number 2, the Winklevoss twins. And as a result, it is so biased and filled with inconsistencies and lies that were likely fed to the author. But the best quote from this book is this: "The internet is not a pencil, it's a pen, and you can't erase stuff." Now, how is Peter Thiel gonna fix Facebook?
Maurice is gonna talk to you about some corporate restructuring.
We'll file as a corporation in Delaware. Come up with a stock structure that allows for new investors.
Now, initially, the Facebook was incorporated as a Florida LLC. As co-founder Eduardo went to high school there. But most venture capital firms prefer that you register in Delaware as a C Corp and not as an LLC, because a C Corp offers better corporate governance, institutional investors, and scalable exits under Delaware corporate law. And speaking of corporate governance.
Now, let me ask you something. Who's Eduardo Saverin?
And Thiel asked this question as he was looking at what is called the cap table, which means the capitalization table. In other words, who owns the company? And at that point, Eduardo owned 30%, and we will soon discuss him getting diluted big time. Now, from an investor's perspective, the question was about due diligence and control. And investors want to know, who are the founders? What do they own? And could any founder create a legal risk later? And here you see who owned Facebook from 2004 through the 2012 IPO, meaning which venture capital firms led each round, meaning A, B, C rounds, etc. And every time you raise money from venture capital firms, there's a risk of material dilution because new financing rounds typically issue more shares, which reduces existing holders' percentage unless they have the right and the money to maintain their stake, often called the pro rata rights. And per this graphic, we see Mark Zuckerberg's net worth over time and his percent ownership of Facebook over time. Yes, he owns less of the company over time, but as long as the valuation of the company increases every time you raise money, meaning in the A, B, and C, etc. venture capital rounds, then your net worth can increase big time. Now, per this S1 filing here document from 2012, Zuck got diluted to owning less than 30% of the company. But on the cover here, it's hard to read. It says that his voting control of the company was 57.3%. And dilution is not good or bad. It's the price of growth capital. And the real question is whether the pie is growing faster than your slice is shrinking, and whether the dilution is happening fairly and transparently. And if you plan to hire great people and raise money from venture capital firms, you should expect dilution. And the goal is not to avoid dilution. It's to make sure the dilution buys you something valuable, meaning top talent and growth capital. Now, we'll come back to this with the movie's starting cap table in a few clips. So the before and after makes much more sense.
I said it's time to monetize the site.
Advertising.
No. We don't even know what it is yet. We don't know what it is. We don't know what it can be. We don't know what it will be. We know that it is cool. That is a priceless asset. I'm not giving up.
Now, Eduardo is wrong and Zuck gets it. Monetize is one of the most misunderstood words in startups, and many venture-backed companies prioritize growth first because they believe scale gives them pricing power later. And you need to think bigger if you want to change the world. And you need to get big fast and then monetize it later. And this is exactly what Zuck did when they bought Instagram in 2012, meaning grow the crap out of Instagram subscribers, then monetize it later. And you can do this if you raise a lot of money. Now let's talk about how Eduardo got screwed by Facebook's lawyers who led him to believe that his ownership was increasing from 30%.
That represents a 34.4% ownership share. Why the increase from the original 30%?
Because you managed to dilute it to award shares to new investors.
I love working with business majors. Would you like to use my pen?
Now, Eduardo is feeling pretty good about his ownership, and then this happens.
You signed the papers. You set me up. You're gonna blame me because you were the business head of the company and you made a bad business deal with your own company?
It's gonna be like I'm not a part of Facebook.
It won't be like you're not a part of Facebook. You're not a part of Facebook.
My name's on the masthead.
You might want to check again.
Now, Eduardo realizes his ownership shrank because the company created a huge number of new shares and he didn't get enough new shares to keep his percentage the same. And the lesson here is always hire your own lawyer, please, when you sign company documents, as the company's lawyer does not ever represent you. Now, you'll notice that there are no traditional courtroom scenes in this movie, and that is because Zuck settled before going to trial. And in business, this is crucial. In business, when it comes to lawsuits, whether you think the underlying claims are strong or weak, litigation's really expensive, it's distracting, and it's risky, of course, and companies settle because it caps downside and lets management get back to building. And in the real world, the Facebook litigation with the Winklevoss entity ConnectU had a settlement valued around $65 million in cash and stock, and Eduardo settled in 2009 confidentially. And by the time of the 2012 IPO, Eduardo reportedly owned about 4% of the company. Now, at IPO in 2012, Facebook's valuation was about $104 billion versus the current valuation of more than $1.5 trillion. And the cap table changes after 1, you add employees via stock options, 2, you raise outside funding, and 3, you restructure the company legally.
You issued 24 million new shares of stock.
What was Mr. Zuckerberg's ownership share diluted down to?
It wasn't.
And what was your ownership share diluted down to?
0.03%.
So this is not accurate. In real life, Eduardo was diluted down to close to 10% at that point. Now, if a company repeatedly issues new shares for investors and employees, and one stakeholder does not have effective protection or participation, their percentage can collapse. And Eduardo signed legal documents created by Facebook's attorneys without getting his own personal lawyer to review them. Now, since I know a lot of people close to Mark Zuckerberg and the VC firms that invested in Facebook, let's talk about how real the movie was.
You're gonna go through life thinking that girls don't like you because you're a nerd. And I want you to know from the bottom of my heart that that won't be true. It'll be because you're
So this breakup scene, which they filmed literally 99 times, although it was so well done, this is all BS. Because Mark was dating his current wife, Priscilla Chan, since 2003, and Facebook was actually founded in 2004.
The whole framing of the movie, kind of the way that it starts is, I'm with this girl who doesn't exist in real life. And I mean, the reality for people who know me is I've actually been dating the same girl since before I started Facebook.
And pause me if you want to read what Eduardo, Dustin, Sean Parker, and Sheryl Sandberg had to say about the reality of the movie here. And Mark Zuckerberg was ultimately a good sport about the movie, and the most successful entrepreneurs are almost always unemotional.
Thanks, man.
Yeah.
Thanks.
You ever end up seeing the film, the social network?
Yeah, I did.
Cool. Oh, thanks. And what did you think?
It was interesting.
Now, Facebook actually gave employees a day off when the movie came out in case they wanted to watch it. Let's get back to clips from the movie.
You invented something in high school too, right?
An app for an MP3 player that recognizes your taste in music.
Maybe you try to buy it?
Microsoft.
How much?
Didn't sell it, uploaded it for free.
Now, venture capitalists love investing in serial entrepreneurs. And remember, the jockey is more important than the horse. And if investors feel that an entrepreneur is not experienced enough, then what assuages that concern is if the entrepreneur surrounds themselves with successful people like what Zuck did with Sean Parker and Peter Thiel. Now, what did Zuck learn from Peter Thiel?
Speaking of Peter, and sort of a closing question, what's the best piece of advice he ever gave you?
In a world that's changing so quickly, the biggest risk you can take is not taking any risk.
That's so true. And if you release your product when it's 100% ready, it's too late, you missed the market. Now, if you start a company and you think investors might not want to invest because you don't have enough experience, you can always network to get more experienced people on your advisory board. Let's now take a look at Facebook's early go-to-market strategy.
We are expanding to Yale and Columbia. Dustin, I want you to share the coding work with me. Chris, you're going to be in charge of publicity and outreach, and you could start by getting a story in the BU student newspaper. It's The Bridge. Somebody at the newspaper will be a computer science major. Tell them that Mark Zuckerberg will do 10 hours of free programming.
Now, 3 lessons here. Number 1, consumers like to be part of something elite. Number 2, use the media for free publicity. And Elon Musk actually did this with Tesla, of course. Have you ever seen a Tesla commercial? Me neither. And number 3, like this book, give in order to take, meaning he offered free coding in return for publicity. And according to this book, Give and Take, which is a masterpiece, the richest 1% of people in the world are givers. Give and you'll receive. It's prophetic, and it's been true since the beginning of time. And as Dale Carnegie says, in business and in life, you need to anticipate someone else's wants, meaning arousing the other person an eager want. And Zuck is not just a brilliant developer, but he's a genius when it comes to business, something Eduardo and the Winklevoss twins do not possess.
After you passed out last night, I went on the Facebook for a little bit.
What's that?
The Facebook? Stanford's had it for like 2 weeks now. It's really awesome, except it's freakishly addictive. Seriously, I'm on the thing like 5 times a day.
Now, that's Sean Parker, and the movie and book mention how Eduardo and Parker hate each other. In reality, they did not. And you'll notice that Dakota Johnson, in her first movie as an adult, called Facebook addictive and with high subscriber growth. And when it comes to consumer internet companies, investors love high subscriber growth, high retention, and high DAU and high MAU, meaning high daily active users and high monthly active users. Now, all the stars were aligned, which is why Sean Parker got really excited. Let's now talk about disgraced Harvard president Larry Summers meeting with the Winklevoss twins.
Mark Zuckerberg stole that idea.
I understand. I don't see this as a university issue. Harvard undergraduates believe that inventing a job is better than finding a job. This action, this meeting, is wrong.
Accurate. And that is exactly what happened. Pause me to read Larry Summers' reaction to that scene. Also, the Winklevosses likely had no legal merit for that case, per this quote from Harvard law professor Lawrence Lessig. Now, separately, the most important lesson from this video is that inventing a job is better than finding a job, especially today when AI is at risk for destroying so many professions.
91% of people who try it once will come back. Now, if you allow me...
Excuse me 1 second. What sound is he making? Is that like a tisk?
It wasn't a tisk. It was...
That's not exactly what happened. And by the way, that was brilliant screenwriter Aaron Sorkin. But the scene shows how with early stage companies, sometimes you need to bring in adult supervision, like with Eric Schmidt, with Larry and Sergey at Google, or in this case, Peter Thiel and Sean Parker, who's a bit older than Mark. Now, in this next scene, Zuck is wearing pajamas under Parker's guidance and meeting with a VC firm to raise money.
They're gonna pitch you. Case Equity is going to pitch you. They're gonna beg you to take their money. You're gonna nod, you're gonna nod, you're gonna nod, and then you're gonna say, Sean Parker says, you. Walk out.
Now, what really happened was the meeting was not with Case Equity, but with Sequoia, as Sean Parker got pushed out of a company apparently by a Sequoia partner before. And as a result, Facebook did not let Sequoia invest. Rather, another incredible venture capital firm called Accel did. And I know one of the people who invested from Accel as we taught at Stanford MBA together. And she told me that when Accel went to pitch Zuck to lead the A round, they were competing with other top venture capital firms, and Accel brought 3 term sheets, one with a valuation of about $100 million and the other 2 term sheets with lower valuations. The second that Accel sensed that other VC firms were bidding higher, Accel pulled out the $100 million term sheet and they won the A round. Now, here's who led the other rounds before the 2012 IPO. And as we know, when you raise money, there's a good chance you're going to get diluted. But that's okay, because you can be worth a lot more this way. You'll notice that Mark Zuckerberg's ownership continues to decline, but by the time of the IPO, he had over 57% of the voting power, and to this day, he still has more than 50% voting power. Now, if you can, make sure your voting power in your company is above 50% and cannot get diluted when you raise money, which is not easy to do. Quick side note, Larry and Sergey's voting power with Google combined is above 50% today. And as amazing as Facebook and Google are, they were lucky when it came to investment timing. Why? Because post 9/11, venture capital investors were scared, and the only sure thing to invest in back then was Google. Same thing in the financial crisis of 2008. Venture capital firms were scared to commit capital, and the only sure thing back then was Facebook, which I invested in back then. Separately, why did Facebook rename themselves Meta? Well, I think it was not just because of a metaverse rebranding effort. I think it was because they know the Justice Department could one day break up big tech, and Facebook could be split up into 3 companies, including Instagram, Core Facebook, and WhatsApp. And this is also potentially a reason that Google rebranded themselves as Alphabet. Let's talk about grading of the social network for startup and finance realism. We saw startup finance in its true form. Not spreadsheets, but power. Who controls cash? Who controls equity? We learned how dilution works, why incorporation and clean documents matter, how investors think about risk retention and scaling. And the movie's depiction of a $500,000 early investment from Peter Thiel broadly matches the reported history. Thiel invested $500,000 in 2004 at roughly a $5 million valuation and later served on the board. Here's what Peter Thiel had to say about their first meeting.
What was the first meeting like? You know, it was not like a show on Shark Tank. It was Zuckerberg was 19 years old. He was still pretty introverted. Sean did most of the talking.
So without Sean Parker's guidance and introduction, Facebook would not have gotten Thiel's money and, more importantly, his advice. And the company also reincorporated in Delaware, and this is also a very real venture norm. Many investors prefer or require Delaware incorporation because of its specialized corporate law ecosystem and widespread investor familiarity. Finally, the movie's 0.03% dilution scene is not accurate, although it's very powerful, and it should be treated as dramatization and simplification. Public reporting suggests Eduardo later held a materially larger stake after settlement, with later dilution over the years of financing. As incredible as the finance scene were in the movie and the book are likely based on interviews with Eduardo and the Winklevoss Twins and others, and as a result, the movie and the book are really one-sided. Now, the movie is a fabrication, but it's a masterpiece from a storytelling perspective, and Quentin Tarantino and many others call it the best movie of the 2010s, and the film won 3 Oscars. But the finance lessons were more or less accurate. As a result, I'm going to give the movie a hold rating as a teaching tool, not because every number is perfect, but because it nails the incentives. Founders want control, investors want protection, and growth creates both opportunity and conflict. Now, if you enjoyed this video, please like, subscribe, and comment, and please let me know what movie or TV series you want me to react to next. One more quick thing. If you want to join my business and career social network, where you get hundreds of hours of my online courses, which have over 2 million paying customers in every country, then please click the link in the description to set up a call with me to discuss joining. You get all of my courses, meaning 700 hours of content to watch on the web, or on my iOS and Android apps. Plus, you get 300 hours per year of daily group Zoom calls with me and 3 hours per year of daily live MBA teaching with me. Plus, you get one-on-ones with me. And most importantly, you get access to my business social network, as your network is your net worth. All in, you get over 1,300 hours and access to many like-minded people that share their wins, and we all help each other to get a better job, invest better, start companies, and so much more. Again, please click the link in the description to set up a call with me to discuss joining. Thank you.